And no doubt the Blackwell shipment guidance was something that many investors were looking at too. Of course, we do have the commentary around the supply not being able to meet demand expected for several quarters or so. No doubt giving the company somewhat a degree of pricing power in this space. But at what point do you think that this dynamic becomes a concern for investors?
It's the $64,000 question, as we say in the States. Right now, believe it or not, even though the stock tripled last year and is working on a triple this year, it's trading at about 35 times next year's earnings. And earnings are supposed to grow 40 to 50%. So that is a PEG ratio of less than 1. That's actually an attractive valuation. The problem is, at what point do the folks that they're selling their GPUs to, what we call these AI hyperscalers, do they quote unquote digest their purchases and slow down their purchases and their build out of the data centers? If that happens, and then you no longer have the growth story underpinning. But I don't think that really is a risk at Nvidia, not just in 25. I also have a pretty robust forecast for 26. So yes, down the road, perhaps, but I actually think it's pretty clear sailing for at least 2 years.
Tens of billions of dollars have been committed by U.S. tech firms to the construction of AI data centers over the coming years. These declarations have contributed to the excitement around data center construction businesses. For instance, according to regulatory filings, Crusoe Energy, a business that constructs data centers for major AI companies, intends to raise over $800 million in funding. According to the documents, the business has already received over $685 million of the $818 million it is looking for, with 70 investors helping to fund the project. Crusoe is one of several companies with a crypto heritage that have switched to artificial intelligence in recent months. Global demand for data center capacity might increase between 19% and 22% annually between 2023 and 2030. Reaching an annual requirement of 171 to 219 gigawatts, according to a report by consulting company McKinsey. According to a McKinsey estimate, in a mid-range scenario, the demand for AI-ready data center capacity will increase at an average annual pace of 33% between 2023 and 2030. According to the consultancy firm, by 2030, data centers that are capable of handling workloads involving advanced artificial intelligence will account for about 70% of the entire need for data center capacity. According to the paper, Gen A, currently the advanced AI use case with the fastest rate of growth, will make for about 40% of the total. Asa Merchant, a Citi analyst, pointed out on November 21 that the chipmaker had delivered strong results and that the $37.5 billion in outlook suggested sales increase of 70% year over year, surpassing forecasts. The chipmaker stated that Blackwell manufacturing shipments would start next quarter and ramp up further, with current demand indicators anticipating that supply will fall short for multiple quarters over the following year, the expert added. According to the advisory, management also mentioned on the call that AI is gaining traction in corporate settings, with full-year AI enterprise revenues predicted to more than double from the previous year and the pipeline further expanding. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Nvidia, the company's data center unit, its biggest division so far, seeing revenue double from a year ago to just over $30.8 billion during the third quarter. That's more than the combined revenue of its rivals Intel and AMD. Our next guest predicting that Nvidia will continue to lead the data center GPU market, but seeing more room for the AI juggernaut to expand. Let's talk about that with Olivier Blanchard of Futurum's Group, a practice lead for devices. Olivier, great to have you here. So talk to us just about that demand and what you see as that growth opportunity ahead.
Hey, good morning. Thanks for having me on. Well, I mean, it's kind of the same story we've been telling for the last year, 2 years, really. Is we're in the middle of an AI transformation, a huge disruption. NVIDIA came in early with really the right types of products and the right roadmap. So they gained early momentum and early scale, and now they're just building on that ahead of everybody else. And primarily, it's also about the number of GPUs versus the number of CPUs that you need to run these workloads in the data center. It takes a lot more GPUs than CPUs. So by virtue of that fact, NVIDIA has an advantage just in terms of the numbers. But on top of that, they just have a really good product. They got there early and they were able to scale. So now it's just it's gravy from here for a while now for them.
So what's the excuse then for people who want to sell, for the first-time responders to those results yesterday who were responsible for a little bit of that momentary dip in the stock that we saw?
I don't know. I mean, honestly, it's been baffling. And it's not just NVIDIA. I'm looking at other companies like Qualcomm, for instance, that are delivering super good results. AMD is also delivering super good results. And every time these tech companies, especially chip companies, deliver outstanding results, whether they hit their target or they exceed their targets, some people in the market are unhappy. And I don't know. I guess maybe they're just not happy about anything. But NVIDIA is on track to continue doing this for some time. There's no reason. There's nothing in the numbers that tells me that that they're not a good bet or that they're not on the right track to expand, to continue growth. Even their Blackwell, right, which is sort of a risky bet for them, is looking really good. Demand outstrips supply, and that's going to be good for NVIDIA moving forward too.
Today, NVIDIA is best known for producing state-of-the-art chips that power apps like ChatGPT. Since the start of 2023, the company's stock has increased tenfold, making many investors much wealthy. With a market valuation of almost $3.5 trillion, it regained its position as the most valuable firm in the world this month. NVIDIA has consistently produced impressive results in spite of worries that competition would overtake it or that the AI megatrend was creating a bubble that would eventually burst. This trend was evident once more in the company's fiscal 2025 third quarter earnings report, which was released on Wednesday. The quarter's total sales exceeded the average forecast of $33.1 billion, rising 94% year over year to $35.1 billion. As demand for its graphics processing units, GPUs, continues to exceed supply, the data center segment saw a 112% increase in revenue to $30.8 billion. As the business proceeded to increase its leverage over its operating costs, profits likewise soared. Adjusted earnings per share increased from $0.40 to $0.81, exceeding the average forecast of $0.75, and operating income grew by 110% to $21.9 billion on the basis of generally accepted accounting standards. An organization the size of NVIDIA has never expanded so quickly in history. It's sustaining scorching growth rates for far longer than analysts had anticipated, although the 94% sales growth was surprisingly its slowest pace on a percentage basis in 6 quarters. Even while its percentage growth slows, the business's real growth is accelerating since the amount of revenue it adds each quarter in dollar terms is also growing sequentially. Some analysts questioned if NVIDIA's degree of dominance in the AI chip industry could last earlier this year. Intel and Advanced Micro Devices have each released rival AI accelerators. They have, however, found it difficult to challenge NVIDIA's commanding market share. While Intel started a significant reorganization after its stock fell to a 20-year low, AMD disappointed the market with its most recent earnings report and announced layoffs earlier this month. According to CEO Jensen Huang, the demand for NVIDIA's newest GPUs, which are constructed using its new Blackwell architecture, is insane. This indicates that the supply side is currently the main factor limiting the company's growth. During the results call, CFO Colette Crest described the demand for the Blackwell chips, saying, "Every customer is racing to be the first to market." The management emphasized the size of Blackwell's partner network and the breadth of its applications and customer base. According to Huang, Practically every business on the planet appears to be a part of our supply chain. In addition to worries that competitors would advance against it, the other negative argument regarding Nvidia centers on the notion of an AI bubble. Some observers believe that the enormous capital expenditures on AI infrastructure that are driving Nvidia's expansion will not be justified by the market demand for AI applications. In Wednesday's after-hours trading, Nvidia's stock had a minor decline, but this appeared to be more a result of the stock's valuation and management's advice. That misinterprets the business, though. The stock is trading at a P/E ratio of 45 based on its run rate EPS, and its profits are expected to skyrocket over the course of the upcoming year. The stock doesn't appear to be expensive in relation to its rate of growth. Nvidia's stock still looks like a screaming buy, and the company is still at the forefront of the AI revolution. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
From a valuation standpoint, Paul, and I know I keep coming back to that, many people would be saying that, look, with a company like this, price to earnings doesn't quite matter. How would you kind of counter that argument at this stage, given that it seems like the pace of outperformance is slowing? So they're still outperforming, but the run rate is kind of adjusting to the lower end.
Yeah, that's the key, because the stock has done so well, regardless of valuations, that people need a steady diet of meet and beat and raise guidance for the next quarter. We're seeing all those things, but as you said just now, to a lesser magnitude. An 8% EPS beat in the quarter announced today versus 19% a year ago. And so it's kind of a matter of expectations. The fundamentals are strong. You know, their second source, at least in the United States, is advanced micro devices, but things cannot be going well there, because last week they announced that they're going to fire 1,000 people, which is 4% of their global workforce. And so the way I look at it, if there are any manufacturing glitches, and that was one of the things that I like to hear in today's call, that they didn't make an excuse for what we've heard as a rumor in the last couple of weeks about a overheating of the Blackwell chip. They're now guiding to greater Blackwell shipments in the next quarter than they thought 90 days ago. And in the meantime, if you ever have a slowdown where you have customers digesting, I still think the AI market is very, very big. And even though over time Nvidia will lose some share, they can't always have all the market share. They have an incredible lead right now, and it might be widening rather than narrowing.
Matex, a chip design business that supports huge language models, has raised $80 million in a funding round, according to recent reports from tech news site TechCrunch. Less than a year ago, it conducted a $25 million seed round. According to TechCrunch, the company's pre-money valuation in the mid-$200 million range and post-money valuation in the low $300 million range are the valuations of the most recent round, which was led by Spark Capital. Mike Gunter and Rainer Pope, two former members of the Google TPU team, co-founded Matex 2 years ago with the goal of addressing the global scarcity of AI-specific processors. The company's chips offer outstanding performance at reduced costs, since they are optimized for AI workloads with 7 billion to 20 billion parameters or more. Matex emphasizes how their cutting-edge connection technology improves scalability for big clusters. The co-founders assert that their processors are made to function better than Nvidia GPUs, with the aim of tenfold efficiency in LLM training and output. Investor interest in the AI hardware market has grown as the need for chips designed for generative AI has increased. Nvidia offers solutions for networking, computing, and graphics. Jim Kelleher, an Argus analyst, maintained his buy rating on the shares and increased the price objective for the stock from $150 to $175 on November 21. The analyst informed investors in a research note that the company once again exceeded aggressive consensus projections for fiscal Q3, with revenue growing over 90% and non-GAAP earnings rising by triple-digit percentages. The advice seeks expansion in Nvidia's other end markets, which include gaming, professional visualization, and automotive, in addition to data centers and artificial intelligence. On our list of equities that Wall Street is keeping an eye on, Nvidia comes in third overall. Although we see Nvidia's potential as an investment, we are convinced that some AI stocks have a better chance of producing larger returns in a shorter amount of time. Check out our research on the cheapest AI stocks if you're searching for a more promising AI stock than Nvidia that is trading at less than 5 times its earnings. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below. Click the link to my Telegram channel and join our growing community.